welcome this morning. Hopefully everyone had a wonderful evening. Such a wonderful place. I learned that there's an authentic German restaurant right here in Hot Springs. They've got it all. I mean, they just got it all. So first, just want to open up once again, thanking our corporate sponsors, Sterling Thompson Equine, Horseman's Labor Solutions, the Daily Racing Forum, our friends at Finish Line with Mr. Blanchard speaking yesterday, ExpressBet and First Technologies, EquineLine.com, TVG, Equine Equipment, our buddy Steve Anderson, definitely got good deals for you. And then also SIS, Global Racing and Betting Experts. And we definitely want to give a very loud thank you for another great breakfast this morning from Oakland and their staff. They've done a great job here. We appreciate Friends and the Illinois THA for helping us put out a great breakfast this morning. So our first panel that we'll kick off with today is a very important topic for me. It's something I've been trying to make sure our affiliates have been educated on for quite some time, and that's fixed odds. It's fixed odds in the future of our industry. It's coming. It's here. I shouldn't say it's coming anymore. We've been saying that for a while, that it's coming. But I think we've got a great group of experts here, but also importantly, not only to have the SIS representatives here, we've got two of our own executive directors that are dealing with this. Not that they're the only two, but having experience in this space right now is very important for your horsemen. Again, so it's here, it's on us, and we now need to really move and pivot and focus on how to deal with it. So I will briefly introduce our panel as they come up. We have Michele Fischer with SIS, but also the founder of Darting Star. All right, everybody needs smoke and also Richard Ames is here, CEO of SIS and president of SIS Content. And then of course we have Dave Basler, executive director for the Ohio HBPA. And then Ed Fenasci, my buddy from New Orleans, the executive director of the Louisiana HBPA. So I'm going to turn it over to the experts here in this space, and Michele, I will let you take off.
Thank you, Eric. I started talking at this conference in 2018 about fixed odds. In the 2018 conference, we were in New Orleans. PASPA had not been repealed yet. We had a number of folks on our panel from Joe Asher from William Hill at the time, and we were talking about what would sports wagering, if it happened, what would that mean to horse racing? What do we do? Came back in 2019 when we were in Clearwater, and I did a whole presentation on why fixed odds is something horse racing should really consider. Now it's 2021. We have 30 states that have passed sports wagering bills. Many of them are up and running, and we brought together what I consider an all-star panel here to talk about what are we going to do from a horse racing standpoint. Are we going to embrace this? Are we going to go onto the sports books? What are we going to do? So as Eric introduced everyone, the two gentlemen at the table, both Eddie and Dave, have worked in many of your panels on everything about wagering. Ed had worked 26 years at the Fairgrounds on all matters wagering, and Dave, not only is he an avid handicapper that we see in many of the big tournaments, but he too has been a handicapper and morning lines maker, and brings a lot to the table for this. And I think the award to the gentleman that has traveled the farthest to this conference is Richard Ames, who is here from London. He's now after 5 years at SIS as the CEO. Prior to that, he worked for Ladbrokes, who was one of the biggest bookmakers at the time. He operated 3,000 betting shops and managed other trading and content. So he's with us to bring a perspective that the rest of us do not have. I'm going to share our PowerPoint today, and I promise I won't do all the talking. I'll let them talk here in a minute. But there are 3 ways that horse racing can be involved in fixed odds. And the first one has been happening for over 20 years, and that's the sale of U.S. horse racing to international bookmakers. And in the last couple of years, it came to a surprise when I said this to a number of horsemen. What do you mean there are signals going abroad? Well, it has been. One of the reasons many horsemen didn't know about it, because the Interstate Horse Racing Act does not apply once you go outside of the country, so the sales of that signal didn't necessarily go past everyone for approval as you would on a simulcast contract. But U.S. horse racing is very popular abroad. It fills the 24-hour kind of cycle niche for bookmakers. The largest exporter of U.S. content is a company called GWS, which is owned by the Stroman Group. SAS, who's with us today, is the largest horse racing content distributor in the world, representing 118 race horses. But in the U.S., you're just getting into the U.S. You've been working with parks for about 20 years. So new to the space, and we can talk a little bit about the popularity of it. But that's not where we're doing business primarily. Dave, let's start with you. Ohio is very popular, right? Because of the timing, the circuit. How do you oversee those sales as an HBPA representative?
In terms of international sales, as Michele mentioned, since we don't have the Interstate Horse Racing Act protecting us, what we do have is the export approval letters that we do for U.S. content. And in our export approval letters for each track, we require that not only U.S. sites be listed, but all international sites be listed. And we don't say specifically pari-mutuel wagering. It's any wagering from any international site has to be listed on the export approval letters that they send to us for approval. So by that, even though we're not approving them necessarily for international wagers, we know where they're coming from, and we're able to track the money and make sure that we receive a share of that revenue.
And what about you?
Hello? We have language in all of our meat agreements that covers this aspect of it, very similar to what Dave was saying. So while we're not covering it specifically in our approval letters, we are covered from a contractual standpoint with the racetracks sharing revenue from other sources such as fixed odds.
Richard, from a content buyer standpoint and seller standpoint, what does the audience need to know about sending your signal abroad? From reporting to pricing?
So the process is reasonably simple in that from our point of view, what we need to be able to sell content is pictures, audio, data, which is the kind of stuff that you're already producing. So we need to be able to get all of those things. But what you should be really thinking about from that point onwards in terms of what we do about it and what our competitors might do with it is what content is it being packaged into, how is it being presented to sportsbooks, and what is the revenue that's being generated on a weekly, monthly, quarterly basis, in order that you can see transparent reporting as to where it's going and how valuable it is and how it sits within the broader portfolio of the mix of content that's being used by those sportsbooks. All of that data is readily available, and you should be thinking quite carefully about what you want to see on what basis to make sure that you're close to the development of your product on an international scale.
So it's making sure you're getting the right value for your product.
Absolutely, and that data is readily available, therefore it shouldn't be difficult for you to receive it.
And I just a lot of surprises when I speak to people that maybe are at small, mid-level tracks when they say my content is worth what? And, take Ohio for instance. How is international content priced or bought?
some type of sharing basis, either on a revenue share basis in terms of the profitability that's generated from the sports books, or on a turnover basis, so a share of the turnover. And again, you'll therefore understand that it's quite important that you understand and can see what that turnover is and what that revenue is in order that you're getting your fair share and your fair proportion of it.
And it's also when the product fits in the global calendar versus maybe getting to the betting shops in the middle of our afternoon in the UK versus a nighttime signal is.
So content is always most valuable near to the location in which it's being created. Every time zone you move away from that will change the value, but also, as Michele said, the way in which it fits into the portfolio of content that is otherwise available at that hour, in that store, has quite a significant impact on where the value lies. And again, these are things that you will come to understand over time with the right sorts of reports.
So as both the racetracks and the horsemen's groups are becoming more astute on the value of their product, we're seeing those revenues increasing, coming back to the racetracks, and competition for buying the content is heating up. I would say, SIS is now in the market, and GBS has had the lion's share of it. Now let's move on to number 2 and 3, and these are the 2 topics we're really going to spend our time talking about today. And the first one is the sale of U.S. horse racing to U.S. sportsbook, the host content. At this point, we do not have any sports books offering fixed odds on horse racing. We'll talk about where we are in different states later on. And the second opportunity is going to look a whole lot different from state to state, but I'm going to use the word source market fee from sports books to the state horse racing industry. And what that means is, let's take, for example, you're in Louisiana and the sports books are taking horse racing product. A percentage will go to their local horsemen from that, and that could be statute, that could be negotiation. Each state's going to be a little bit different. So there's a couple opportunities for your product to be sold. Now, Richard, I'm going to ask you to walk us through how all of this works from both an SIS standpoint and from a bookmaker or sportsbook perspective. We sit up here and say, do we want to sell the sports books? I don't know, we need this amount of money, we can't do this, and we're all about ourselves. And we should be. But we also have to be something that is appealing to sports books. So how do we do this? This isn't simulcasting.
No, it's definitely not simulcasting, and it's definitely not simple. So the first thing I'm going to say is this whole subject is very complicated, and it would be very easy to dive into a lot of detail. You'll be pleased that I'm not going to do that. I'm going to try and keep it at quite a high level. But if anybody wants to do that later on in the day and around the day, I'm more than happy to talk about it. Before I get into the detail of what SIS does, I think it's probably worth just talking about fixed odds and what is fixed odds. Because I think, having talked to a range of people in the US over the last 2 or 3 months, there isn't necessarily a clear understanding of what it is. What I'll say here and now is that there are sort of 2 angles to look at this from. One is from the consumer's point of view, the bettor's point of view. What do they expect? What do they like about fixed odds? Why is it something that they perceive to be different to pari-mutuel betting? And the second thing, which the presentation will focus more on, is what does it take from a sportsbook point of view to be able to offer a fixed odds product? What are the things behind the scenes that make that possible, and what is therefore important with it, and is therefore a different philosophy to how pari-mutuel works? So, on the first one.
Well, I'm going to say something real quick. It's kind of funny when we talk about sports wagering, everyone says, "Oh, we've got sports wagering," and then there's fixed odds. Sports wagering is fixed odds. We're just categorizing fixed odds on horse racing, so there is not a difference. If when you're on a sports book, you're betting on fixed odds. So I think that's something I've heard a lot of people just really not understand that definition of.
So at a very simple level, as a bettor, if I'm experiencing a fixed odds experience on horse racing, the first and most important thing is if I have a bet on a horse at 6 to 1, I know that if that horse wins, I'm going to get a return at 6 to 1. So the price is not going to move after the fact, and I'm not going to find that suddenly in the last 30 seconds as the pools shift around, suddenly drop to 2 to 1 or whatever the price may be. It gives me a level of certainty, and we know that in various markets around the world, consumers like the idea that if they place a bet at 6 to 1, that's what they're going to get. And in particular, novice customers, people who are not particularly familiar with horse racing, and customers who are very familiar with sportsbook betting, because this is how it generally works in sportsbooks, they like that certainty. So it's very important to them. The second thing is that they expect to see a lot of bet times. So this isn't about simply win, place and show. This is about all the sorts of derivative markets that can come. You can choose head-to-head races where you pick 2 horses out of the race and just bet one against the other. You can have winning distance, you can have track jockeys, you can have enhanced place type betting where instead of only getting 3 places, you choose to take a lower price but you get 4 prices or 4 places or 5 places. There are a lot of bet types within fixed odds betting, and it's not affected by liquidity because liquidity has no issue here. It makes no impact whatsoever on fixed odds betting, and therefore sportsbooks can be very creative about the types of bet that they offer.
Because they're taking the risk.
They take the risk, and I'll come to that. The other thing they're expecting is multiples, so they're going to be able to take selections and include them in a very flexible style of multiples betting. And that betting might be all about horse racing, but actually it might be about adding a horse race bet to a football bet or a basketball bet, or there's a lot of flexibility here, and it's a different style of betting where the consumer chooses how they pull their multiples together, not the bookmaker. Final thing I'll say about the consumer is they are expecting to see competition on price. So different bookmakers will have different prices on the same selection, and they can go out there and pick and choose and find the best price for the bet that they want to have in a way that they certainly can't within a pari-mutuel toll system. So those are some headlines from the consumer point of view. From the sportsbook point of view, the thing I'm going to say is every single price, every second of the market being open is really important. Because if you strike a bet at that price and it wins, you will be paying for it. So, in general, you can assume the markets will open ahead of a horse racing event either early that morning or even the day before. But from the moment the market opens, every single bet is at a fixed price, and therefore you have to have the right price. That means you have to have a lot of data. You have to have a lot of historical data, and you need pricing feeds coming from experts all around the industry to make sure that your prices are right in the first instance, and then you have to be monitoring the liabilities that you have in your book to make sure that you're not overbroke and make sure that you're changing your prices in order to manage the risk that sits within the bets that you've already taken. This is a very different process. It requires traders, it requires computers and algorithms to be able to balance, and it requires you to be vigilant from the moment the book opens to the moment the race starts. The second thing, and it's probably worth noting, is bookmakers will lose money on lots of races. If the favourite wins, in general, the bookmaker loses. In a way that, of course, that never happens on pari-mutuel. And so, across any range of bets, it's perfectly possible for the bookmaker to lose. Now, overall, they don't, because overall, the ways in which the results flow through mean that they make some money. But there is a very different mentality from the sportsbook about how do you balance that book and how do you make sure you don't lose too much money, you don't lose in too many races in a given day, you find a way of balancing your books. It's a different way of thinking. The other thing is that you interact with your customers based upon the price and based upon the market. So sportsbooks can offer different prices to different customers if they choose to. They can offer promotional prices on individual horses if they choose to. So you interact with the customer using the price selection in a way that is not possible and not part of the dynamics of how pari-mutuel racing works. So it is very different in terms of the philosophy, in terms of the thinking, in terms of the way in which the interaction happens from the consumer's point of view, but also from the bookmaker's point of view. One final thing on this, before I'll probably come back to this later on, is when we talk about margins and commercials, the numbers will look very different. So if you're used to takeouts from total pools of 18, 20, 25%, those are not the margins that will be coming through in sportsbooks on fixed odds. They may get as high as 12, 13, 14%, but often they will be 10, 8, and even down as low as 6. Now, there's a balance here between the turnover and the margin, which we'll probably get into later on. But some of the numbers that you hear will look low, but that doesn't mean that the money is not being generated in significant value.
And
Richard, I just wanted to ask, and if you could illustrate for the audience, that 10-12% range that is typical international horse racing is a much more attractive hold than many other forms of sports wagering, correct?
Correct. Yeah, and I'll talk about the advantage of horse racing over other sports in sportsbooks on one of the slides, because that's very true. It's a very important part of the mix. It's one of the reasons why sportsbooks will be interested in horse racing. Okay, to the slide. This isn't going to be a sales pitch for SIS, but hopefully this gives you some context of what happens around the world and therefore what is likely to happen, the structure of what is likely to happen here. We've been partnering racecourses for 30 years to take their content, package it into TV programmes that are then distributed into UK betting shops to maximise the value of that content for bookmakers. Now that's been going on for 30 years. Over the last 5 years, we've broadened our approach so that we're now operating internationally, and we're now operating within mobile sportsbooks and online and very digitally. And essentially the disciplines are the same, but the range of content that we now represent is not simply about UK and local content. It's about content from all around the world. We have a lot of races, and bookmakers like to have a lot of races because it helps them to maximise the value, and I'll talk about that further on. In the end, the simple rule here is if we can maximise the value of the content of the bookmaker, then that money flows through SIS from the technology that we add in terms of arrangement, pull it all together, and then flows back to the racetracks. And at the moment, well, over the last 5 years, we've delivered over $600 million worth of revenues back to the racetracks that we've been working with. And every year that's growing as we work with more bookmakers and as we work with more tracks. So that there are significant flows of value coming from the bookmakers back through to horse racing all around the world. Again, not going to go into too much detail, but you can see here that we're representing content from various different countries. One of the things that sportsbooks want to know is, if you've got all of this content, how are you going to present it to my customer in a way that is consistent and familiar and enables you to maximise the value of it? And again, we'll talk about that a bit further on in terms of some of the value that we as SIS are able to add. And you can see that, from most of the hours of each day, we have content that we are selling to bookmakers, and with the 400 customers we've got, those bookmakers exist in every time zone around the world, so this content is being distributed everywhere. It's not very easy being a sportsbook operator in the US at the moment. They have a lot of challenges. They are in a land grab for customers. They are spending billions of pounds. Last year, the big four sportsbook in the USA spent over $3 billion acquiring customers, unprofitably. And while they're doing that, they're also trying to launch in state after state after state as those states regulate, and there's a technical burden on them to be able to do that. And as they're doing that, they are trying to add more and more content and markets to their product range. So the reason why I say that is because at the point at which fixed odds horse racing becomes available to them, it isn't a slam dunk that they're all immediately going to do it, because they're all under a lot of pressure and under a whole lot of competing and conflicting interests as to what they want to do and how they want to do it. So at the point at which horse racing does become legal on a fixed odds basis in the state, we're going to have to work really hard to make sure that they want to take it and they want to take it for the right reasons. Now, as Michele alluded to before, there are some really good reasons why they should and why they will, but we are going to have to work hard. The first reason is, as Ed suggested, that this is relatively high margin product to them. So on their normal sports books, they'll be looking at 5-6% as being a pretty normal margin that they would make, and therefore the ability to do 8, 10, 12 with horse racing means that as they're trying to move from their acquisition phase where they're not making money into maximising the value of the customers that they've acquired, having high margin products on a regular basis is something that is really appealing to them. The second thing is there is potentially a lot of content. If they have a lot of races at high margin, then the total value that they can make in any given day or any given month is potentially much higher than if they're going with a small volume of events. So again, that ability to deliver high volumes of content at high margin is really good. The next thing is, if it's presented simply and in the format of fixed odds that those customers are already used to from a sportsbook point of view, then it's easy to bet on and it's a quick opportunity with a quick result. So having results coming every 3, 4, 5 minutes, depending on the volume of racing, is a good thing within the sportsbook mentality because they want customers to stick around and place bets and win and lose quickly and on a regular basis. And then, as I've said, it also enables them to be creative, so they can use their fixed odds skills to create all sorts of markets that are interesting and different and are engaging, not just on horse racing, but also on cross-sell to other products, which means that there are opportunities for horse racing to piggyback on the existing customer behaviour on football, basketball, or the various other content that they will already be familiar with. So this is a nice way to fit it into that looking. There are 8 things that I'll run through quickly here that I think sportsbooks are going to want in order to be able to decide that this horse racing opportunity is of value to them. And the first one we've mentioned, which is 24/7 content. There is 24/7 content. We represent 30,000 horse races from around the globe every year. There are many more than that. There are other operators who have it, and that's not including US content. So it's perfectly possible to have a portfolio. But what they want is to be able to offer a horse racing customer a bet whenever they turn to have a bet, any hour of the day. And that's important to them because it helps to maximise. If they were trying to maximise the value on 1,000 races versus 30,000 races, clearly the overall opportunity is far greater, and it means that within the competing partners that they are more likely to do this more quickly and see bigger value. The second thing is they need a complete race data set. And that is all of the race day data, all of the pre-race data in a format that they can consume. But also, again, for them, having that in a standardised format so that a race that's being presented from the UK looks the same as a race that's being presented from Australia or from the USA or from Saudi Arabia or wherever it may be, that simplicity and continuity of the data format really helps them operationally within their organisations. They want live audio, they want video and audio, they want video, and it helps to promote. It's much more engaging, it drives value, it makes the content more relatable to those bettors. Something which is different in this environment is pricing and odds and trading and liability management. As I said before, they have to have perfect data all of the time. They also have to have a set of people who are able to move the prices, trade the bets, manage the customers. Now, some of them will be doing this already outside of the US because they have, as part of their company in the UK or other parts of the world, traders who do this for them every day. Some of them, if they're US based, may not have the experience to do that, so they'll buy those services in from various different companies. SAS is one of them, and there are other different ways in which they can do that. But having that continuity of pricing across all of the content all of the time is something that's really important, because if they get it wrong, they lose money, and they don't want to do it. As I mentioned before, they want to have a wide range of bet types. And some of those they might create for themselves, but some of those they will buy in as part of these data feeds and have them managed. And there will be competition on the creativity of the bet types that are offered. Because we know that fixed odds customers move from bookmaker to bookmaker and they find the types of bets, the types of prices that they like. So there will be competition when it comes to betting types.
I think it's important on that topic to expand a little bit because I think that that's where there's some opportunities for enhanced wagering in the U.S. We've talked offline about some of the things that happen. If you've got a race with 6 horses, great stakes race with 6 horses, and there's a 3 to 5 shot in there, there's a good chance that the bookmaker is going to take the 3 to 5 shot out of the pool entirely and price everybody else as if that horse weren't in the race. So it makes an unbettable race now a bettable race for people and potentially greatly increases our handle. So the creative types, and they're endless. I mean, we go through it, but there's a lot of different things that we don't have the ability to offer in pari-mutuel pools that fixed odds can offer and perhaps enhance our product.
That's absolutely correct, and it's a very common practice. And interestingly, if a price really shortens up, then they might not have had that market to start off with, but as they see the price shortening up and becoming unbackable for a normal customer, they introduce the market which doesn't have that favourite in it. And what they'll also probably introduce is what is the winning distance of that favourite. So there are 2 or 3 different ways in which you could do it. And this is a way that fixed odds allows betting types which are not available within an environmental environment.
And Richard, I wanted to ask, with all this different flexibility and these new types of wagers, like Dave was explaining, you're finding internationally that the demographics of the customer base, this appeals to the ever elusive younger horse race wagerer that I know 25 years ago at a simulcast convention, we had a panel at every convention of the aging demographics of the pari-mutuel wagering and what is the industry going to do to address this. And no one ever came up with a solution. This is one of the aspects of fixed odds that most excites me, because it gets back to introducing the excitement of horse racing to a much larger customer base.
Look, that's completely true. And I would add to it to say, on average, your sportsbook customers, of which in the USA now there are tens of millions of them, on average you'd be saying they're in their 20s, 30s and 40s. Whereas you'll know that your pari-mutuel customers are more likely to be, hopefully in their 40s, but more likely to be in their 50s, 60s and 70s. And the thing is, these customers in these sportsbooks are used to this type of betting because this is the type of betting that happens there. So at the point at which they go to horse racing, it's familiar to them. And indeed, if it doesn't look like that, then it's unfamiliar to them, and therefore it's more difficult for them to participate. So I think that's a really important point, and these customers are expecting this type of betting.
I think as you say that, we've heard a number of opinions how fixed odds should be implemented in the United States, and there have been some that have suggested limiting the bet types. And I think from what you just said, that's just the wrong approach. You know, when we get into some of the threats to the pools, limiting it only hampers what we're trying to do here.
I think it's a misunderstanding of the philosophy of fixed odds and those customers. I think it's a huge missed opportunity to take that point of view, because bookmakers will compete by being creative and putting fun things at the right moment in time in front of these customers to encourage them to participate in the sport. And it will enable them to enjoy the sport in a way that is not available to them at the moment. So it's a missed opportunity to limit the creativity of these sports books. Other people want them to take their skills and apply them to horse racing. Final 2 points. Consistent presentation and the ability to make horse racing simple and easy and present it to the style and the demographic of customers who will be in the sportsbook is really important. And the final thing, and I've kind of already alluded to it, is the sportsbooks want to have a volume of content in order to make the integration worthwhile. Integrating horse racing data is a reasonably significant exercise from a software development point of view. They're not going to do it, even if it's for high-profile events, such as the Breeders' Cup or the Kentucky Derby or whatever it may be. If there are only 1,000 races, the economics don't work. They want to have an integration that enables them to have access to thousands of races and content every day in order to be able to apply these skills and have the right type of people employed to be able to maximise the value. So that volume is really quite important.
I feel like we're dispelling myths over here, because we've also heard a lot of racetracks say, well, let's just try it with a couple tracks or a couple days, and that's just not going to work with bookmakers. And I think taking that toe in the water approach is going to fail. So, that's another thing we've heard, so we dispel that myth as well.
I'm not going to dwell on this slide, other than to say, the heading of the presentation was this is not simulcasting, and it really isn't. The complexity of bringing this portfolio of data together in the way that sportsbooks want to consume it is complicated. And when you add in the need for second-by-second pricing feeds and trading and liability management, then it requires quite a significant IT stack and operational process in order to deliver it. And it's across all of those 8 things that we've talked about, and the ability to be able to fit into some things that sportsbooks are already consuming and working with on a template basis is a simple and easy way for them to access it, and is a simple and easy way to be efficient and therefore maximise the flow of money that comes back through the racetrack.
So what you're saying there, Richard, is that you're not going to see individual tracks similar to a bookmaker or several bookmakers. They're most likely.
I think that the sportsbooks are going to say it's not worth it for one track. It's not worth their time and effort to do the integration. What they want is a standardised format an easy, efficient route through something which is of volume to and rather than individual. Yes. That's our office, but again, I'm not going to go through that other than we have people monitoring this thing 24 hours a day with foods coming in from all around the world, monitoring the quality with the sole purpose of maximising the value for betting and having that money flow through the system.
And what about your patent technology to handle so many races? I think that's pretty interesting.
Okay, so much of this process is automated. For those of you who've sort of been close to broadcast channels before, in the good old days, which were only probably 4 or 5 years ago, if you wanted to create a TV channel, you probably would have needed in that room 10 or 12 people to make all of the things work. Now we have one person overseeing 6 channels because everything is happening via computer. And that computer automated software is a CIS-patented piece of software which enables us to ingest this content from all around the world, turn it into a standard format for these sports books, and there is real value for us, and that content is already being used by very significant sports books all around the world, and many of the significant players over here, the biggest players over here, are using this system in their European and their international operations, and indeed we will use it when they come over here. So, yeah, there's a big investment. We've invested over 5 million in this system in the last 2 or 3 years, and there are further investments to be able to continue to maximise the value for in large part now we're thinking about the US market and how the US customers will want to see the presentation and how US channels will look different to European channels, and that work has started already, and we're looking at how we can maximise the value of these systems for US customers.
So bookmakers can have customized channels if they
Indeed, they can have them, and we, in this particular building, we have customers who sit in this building and work with us to have their own graphics, to have their own style, to have their own prioritisation of content displayed. And some of those customers are not UK based, and actually their teams are not based in that building, even if we are. They've got live directors in different countries plugging into this system and directing how they want their content to be presented in Spanish, or indeed one we're about to launch in the next few weeks is in South Korea. So we're able to accommodate all sorts of international influences and bespoke content. Here we go. So we'll get to the interesting bit, and there'll be more on this in a couple of slides time. The guys are talking about how does the money flow through. Well, ultimately, it's relatively simple. We buy the content from racetracks, and we can do that in a range of different ways. At a simple level, we say either we pay a fixed price for it, or we have some sort of share in terms of revenue share or turnover share. Very often we'll put minimum guarantees in place. So there's a minimum guarantee that there is a sort of fixed element with a revenue share that goes over the top of it, because we're all striving to go above and beyond that fixed price. But we can be quite flexible, and a deal that we do with one track doesn't have to be the same in another track down the road. We can be really flexible, but we can also do group deals and in also various different ways. And we have many different combinations of this in different parts of the world.
And what just so that everyone completely understands, turnover share would equate to the handle, and the revenue share would equate to a percentage of the takeout.
Correct. Yeah, correct. And again, I think we'll talk in real detail about this in the next couple of slides, so I'm more than happy to get into detail. Once we have the content, it goes into our portfolio, and we are selling that and distributing it to our range of bookmakers around the world. And in some ways, we have a similar view with those guys, which is either we charge them a fixed license fee, but more often we have a revenue share, whereby either on a turnover basis or on a profit basis, as just been described, we take a share of that and that flows through the system. Now, we are moving more and more towards turnover and revenue shares, because what that means is that we are all in the same game. We have skin in the game, which is how do we maximise the value of that content of the sportsbook. That helps to maximise the profitability that system make, but also maximise the profitability that the content owner makes. And therefore we're all aligned in terms of our incentives and our intention to grow the business. So more and more we're moving towards some sort of share-based model. And as we said at the beginning, transparency about where that's going and what is being delivered in terms of turnover and revenue is something that's really important, so that there's trust all the way through the system and everybody is aligned. And of course, what the additional thing which you'll be aware of is there are other ways in which racetracks can generate revenues from sportsbooks. So we also get involved and facilitate sponsorship deals and other types of deals that enable money to flow through. But the key driver is how do we get these commercial terms in place? Now I know that here, and indeed on a state-by-state basis, that will look and be different. And I'll allow Michele to guide us as to how it's going to be. But this is what it looks like around the rest of the world. And one of the key things is flexibility to be able to deliver a different type of commercial model based upon the needs of the sportsbook, but also based upon the need of the content owner and the state regulation and all the various different things that will have influence upon it.
And now we're going to move back onto the U.S. soil and look at why, as an industry, we really should consider this. And we're going to a good old-fashioned SWOT analysis back to business school. Let's start with the strengths and opportunities for horse racing. And one of the things that we should say right at the offset is horse racing had a fabulous year in terms of handle in 2021. It's the highest it's been since 2009. We, in some states, we may have a false comfort. Prices are very high. You look at Kentucky with HHR. We're booming there, booming really well in Virginia. But when you look at the big picture across the United States, is the simple answer is horse racing is not self-sufficient. We're receiving alternative gaming to support our purses, and one of the things as we consider moving on to the sports books is that this is an opportunity to possibly become more self-sufficient because we'll be betting on horse racing, not betting on a BLT machine, not betting on an HHR machine. And that's something we've failed to do since the 1990s when racinos were invented and started. When the purses went up, a lot of good things happened over those years, but we still aren't in a better position with fans, handle, that sort of thing. So let's start with strengths and opportunities, but I just wanted to point that out first. What do we, we'll get into what do we have to lose here. Let me open this up to both Dave and Ed. I want you to kind of follow along here and give me your thoughts on our opportunities and strengths here.
I think in terms of strengths, let's start with U.S. horse racing, fixed odds internationally. It's happening now, people. So, we hear Richard made a great presentation. What the hell does it mean to me? I don't know what's that mean to me. Well, we're already selling our content. Our tracks are selling our content internationally for fixed odds wagering. What's this presentation mean to me? Another company is looking to move in that market, and inevitably, and just like anything else, when there's competition in the market, pricing goes up. So what that means to us is right now, in your simulcast contracts, you may be getting $1,000 a day from GWS to sell your content for fixed odds across the world. I would encourage you to talk to your track partners and bring in competition, and whether they contract with GWS again or they contract with CIS, the numbers that are being discussed, you go from 3 figures to 4 figures a day, or you go from low 4 figures a day to mid 4 figures a day, and you times that by 100 racing days, that's significant. We're talking $500,000, and that's already being sold. There's no bleed there, there's no anything there. It's happening right now, and all you're going to do is increase what you bring in for your horsemen by this increased competition. So internationally, I said there's no downside to that as a strength.
And one thing you do have to think about is that our parimutuel pools have a lot of international players in them. We don't break down our handle as to where it comes from, but you have to believe those players are shopping. They're playing in our parimutuel pools. They're laying off on bookmakers internationally. So when you start asking, what does that mean to your horse player? Well, some of your big guys are already utilizing both systems to get the best value for their bets.
And in terms of strengths, for U.S. sports books, our product in U.S. sports books, and obviously I've got more concern about that. But in terms of strengths, what we just talked about with Richard, the opportunity to have many more bet types, to make potentially unbettable races refer to it, and that's a positive. So that's a big strength, is bringing in younger folks and making unbettable races for people who currently bet on our product. That's undeniable strength and an opportunity there, I believe.
Ed?
And what I'm most excited about is everything that is contained in that block of opportunity. So I think this is the future of horse race wagering in the United States. Not this year, 5 years from now. This model of sportsbook wagering, for many of the reasons that Dave has stated, has competed very well with other forms of gaming. The pari-mutuel model has been eroding over the course of the last 30 years because it's not standing the test of time, so to speak, excuse me, with the other forms of gaming coming in and capturing the attention of the customer base. Something that Richard said earlier, in Louisiana, they went live on mobile devices on the NFL championship weekend. And the volume of commercials that were playing on the 10 days leading up to that was just staggering. It was like a heated political race type level of advertisements, all with various incentives to sign up with this sportsbook app over that sportsbook app, all of them giving you a multitude of free play in order to get you introduced to their website, get you to become a loyal customer of that particular app. And since then, I picked one, I got on, made some bets on some fun bets on Championship Sunday. And then they start directly marketing to you through the app. Hey, Ed, there's a free bet for you waiting today if you log in. This is the type of interaction that is going to appeal to those 20s and 30-year-olds who are used to doing much more than someone my age that does commerce-wise on their mobile app. So you have the new audience, you have the expanded distribution, because I think it's just going to grow the entire customer base in an exponential way. And that's the part of it that excites me the most.
And the strengths and opportunities sort of blend together in the fact that what Ed just said is correct. There's been, and Richard said, companies are spending billions with a B dollars in advertising to bring in customers, and the fact that we can get our product to tag along, pari-mutuel wagering is not going to be in the sports books. Fixed odds wagering will be in the sports books, so we take advantage of the billions spent to bring in customers and get our product in front of millions and millions of potential new fans. That's an opportunity for sure.
And I would simply view it as we want shelf space on these new e-commerce sites. We want horse racing to be there prominently displayed for people who may not have had in the past consume that product. We want the widest distribution for horse racing possible. That will have just repeated positive effects on the industry.
And obviously part of that opportunity, which we really haven't touched on a lot this morning, although Richard hit on it, they're betting table tennis from China, in U.S. sports books. And the fact that we can fill that void a lot of times during the day so that they don't have to play table tennis from China or cricket from Australia, things that people have no idea about. We can fill that content void with a lot of racing, and that's not just attractive to sports books, but that's attractive to horsemen and racetracks for the opportunity to increase our revenue. So,
and who knows what's going to become the popular weight, right? Two breeds are going to win at the fairgrounds. I want to bet on that. And Myriad, this trainer is going to win a race. This jockey is going to win 2 races, and they do these parlays on one product. But they also do these parlays, as Richard hit upon. You can bet on a hockey game, marry that with the 5th race at the fairgrounds, marry that to maybe a the sports book can break out your portion of that next parlay to determine what's going to go back to horse racing as its share of that revenue.
That's a regular occurrence around the world, and this cross-sell and this engagement and focus on the horse racing product. This idea that if there are jockey bets or trainer bets or ticket types, that the consumers are thinking really carefully about horse racing. It delivers a longer-term commitment to the sport, longer-term commitment to betting on sport, and it's something which the creativity of fixed odds betting markets really assists with.
I think all of these opportunities are here, but they can also be a big threat to us if we do nothing. You know, I spent 16 years of my career working in the tote side of the business, and to have spent the last 4 years of my career talking about, let's look at expanding in the U.S. to fixed odds. I never would have brought this topic up had sports wagering not come into our market. It just changes the entire field. You know, we're no longer a monopoly. There's lots of entertainment options, but for a sports bettor, why are they suddenly going to go play pari-mutuel just because they like to bet? It's not going to happen, but if it's the same as every other sport, I think they'll give it a go, as we saw with table tennis. You know, I akin where we are today as where the industry was in the 1950s, and that was when the NFL had to make a decision: do we go on TV every Sunday? And you know, I wasn't around at that point, but from the reading, it's, you know, horse racing was very afraid. You know, we're waiting for some illegal bookmakers out there. If we put our signal out, it's just going to ruin horse racing. And look at where we are today. I mean, other than a few major race days, we pay to put our product on TV, whereas all the other sports are getting paid to have their product on. So, you know, we are at a crossroads as an industry. We embrace it, or we don't, and we face the consequences. Then we put our eggs in the basket of looking at alternative revenue, and that revenue, as we all know, in certain states is not for certain moving forward. As governments taking away subsidies or percentage of slots, decoupling is coming. You know, the industry has to look for a way to support itself for the long term. So, you know, one of the things, and we'll talk about this frankly because I think it gets brushed under the rug a little bit from the proponents of fixed odds, is I hear, what about cannibalization? What will happen if this pyramid, or what we're making a great amount of takeout, goes away and it moves on over to the fixed odds? And there is going to be leakage. There is no doubt about it. If anybody tells you there's not, they're wrong. But what we are trying to do here is expand the whole market. And in how we approach it, I think as we spoke earlier, not trying to limit it, but trying to get widespread distribution, it is going to be really important. And if leakage matters, we'll be state by state. You know, if your purses are coming from HHR, or your purses are coming from VLTs, and you have a little bit of leakage, well, it's okay, your purses aren't going to change. But if you're in a state where you're depending on pari-mutuel wager, you might look at it a little bit closer and have a different concern, and that's valid. And I think we need to talk about those things and look to other locations. Now, Richard, I'll call upon you here. Let's talk a little bit about leakage and cannibalization. What do you think will happen here?
Yeah, there will be some, but I think the important thing to start with is to say what the fixed odds product does is open up the horse racing product to tens of millions of customers who currently are not betting on it. And if that were not the case, then the leakage risk would be enormous and probably not worth it. But the fact that it will be opened up to that customer base with all of the money that's being generated to get those people to interact with betting offers a huge opportunity which is worth taking a look at the leakage. Now, it is the case that experienced horse racing bettors, when they see the opportunity of fixed odds and the ability to find markets that they otherwise couldn't bet on, and the ability to compete on price and find odds, they will also go and have a look at that. So they will. There's no point in trying to deny that. But if you look at what happened in Australia, and I've heard this example used in many different ways. Australia went from being a pari-mutuel market to being a dual operating market, and over time, at this moment in time, fixed odds and horse racing is probably 55-60% the turnover, as I would describe it, with pari-mutuel making and the rest. But it's taken 10 years to get to there. And there's been a transition over time, and they have watched carefully how the different commercial constructs that have been put in place for fixed odds have been able to deliver revenues through to those tracks, so that overall there has been benefit to racing from the fact that fixed odds has come in, the appropriate commercial constructs, and that racing in general has benefited from the transition. But it's taken 10 years, and they went into it cautiously and carefully and gave themselves options to be flexible after year 1 or year 2 to make sure that they were not missing out on things that they hadn't predicted. And I would recommend to you, without being specific about it, that attitude and approach is something that I would encourage you all to take. And again, back to the point of, if you have good visibility and clarity of what is happening with your product and where it's going and what revenues it's generating, then it enables you to make well-informed decisions. And I think that is an opportunity that's coming down the road and one you should really be thought about.
I mean, the good news for horsemen is, and this is overly simplistic, but not terribly oversimplistic, it's not a real complex formula. If you approve meet to meet, and we set whatever, I'm going to say, not a fixed fee. We're going to set a host fee rate based on handle, which they'll call turnover, but a host fee rate based on handle. And at the end of the meet, we come back to figure out what our leakage was, and that just simply, if you average $800,000 the previous meet and you average $750 this meet, you lost $50,000 a day. Now there may be other factors that played into that. It may not purely be fixed odds wagering, but let's say we just take that figure. You take the average that you receive per dollar wager, and that's an oversimplistic formula too, because I know we've got host fees that are all over the board, but we can all figure out an average per day that we get per dollar wager on an export site. You times that by your decline, and if your increase from fixed odds is higher than that, you've increased your revenue. If it's lower than that, you've decreased your revenue, and you may want to come back to your business model before you approve for the next meet. So there is a way to calculate this. I said it's overly simplistic because there's obviously other factors that come into play in terms of your total handle, and obviously you might figure out you lost revenue from a higher host fee site than your average, and that sways it. But that's a pretty simplistic formula that can work on this. And obviously the thought process is we're going to greatly increase our handle, which they call turnover. We're going to greatly increase our handle by being exposed to all these new individuals, and that's going to overcome any leakage that we have in the pools. It's bothered me, and CIS has not been the company that's done this. They've said it's the opposite, and there haven't been many companies that said, but there is one company out there that is very involved in the fixed odds product in New Jersey that says flat out there's not going to be any leakage, and that's just not true. There's going to be leakage. When you give the players another option at better pricing, they're going to go to that product. I mean, so there's going to be some leakage, and to say there's not is disingenuous, which I said on a call and almost got threatened to be sued over. So.
Well, and I think we should make the point that the tote isn't going away. There's still a place for the tote for players. You know, the horse players are going to have an opportunity to shop, and there will be times where there's better value on the tote, and that may be any time a horse is between 5 and 20 to 1. It may be better to bet it on the tote. You're also going to see your pick sixes and bet types of that nature, pick and bets that you're not going to see on the fixed odds. So, you know, really we're looking at these as a complement to each other, not necessarily that we're coming in here and saying, oh, throw that out, let's do this. This is a complement to each other. And I think what you said, Dave, is a perfect segue into our next section is what is happening from state to state and looking at it. You know, the one area everyone's talking about is New Jersey, and they've had some legislation that's been passed for quite some time. They've not gone up and running, and you know, they have a completely different approach than what we're talking about here. You know, there's an approach putting it at a racetrack. Now, I don't have a problem with it going to a racetrack, but that's not where you're going to find new people. You want to talk about cannibalization? Well, everybody walks in a racetrack there to bet on horses. So putting this alternate type of betting there isn't going to grow your market. You know, to be clear, what we're talking about here is going on to sports books, going to a new market that just likes to bet, introducing people to horse racing that would never come to the racetrack, that would never go on an ADW and open it. Yes, there will be current horse players that play this as well, but what we're gambling on is to grow the market with these new people that we already know are betting on cockroaches running, turtles running, I don't know, anything you can think of, they will bet on. So, you know, that's the opportunity. So let's talk a little bit about New Jersey. They have done something that we're not seeing anywhere else. It's very unique. They've approved fixed odds wagering. It's not under horse racing. It is not under the sports wagering. It's its own piece of legislation, and that's made things complicated as to where does it fall, how does it go. You know, trying to put things into a racetrack and say from state to state, that's a whole different set of rules you need to change. You know, how do we introduce this into the states? You know, we see in some states when sports betting was passed, they carved horse racing out and said, no, no horse racing. Trying to protect it. And everyone thought that was a great idea until now we really get to looking at it. We have the Interstate Horse Racing Act that does protect horse racing. It's, you know, as you know, you gotta have the approvals to take a bet. And to think that any licensed U.S. operator is going to risk what they put, the millions and billions of dollars they put into their sports book to take a horse race illegally in the U.S. is just not gonna happen. So, you know, this is an opportunity that we have to also work with the sports books for. So New Jersey is gonna be up to a slow start. We still are unpackaging how it works. You know, there's been many things written about how it works. I've read all the pages of the legislation and the regulations, and I'm not sure sometimes that I know. But we'll keep watching that, but that's a very, very different model. What we're seeing in Colorado is they've approached it differently. Dan Hartman, who heads the gaming entity, used to be the head of racing, has a soft spot for racing and knows racing very well. And he looked at it as, like many sports books do, it's another sport. Let's just add it as another sport. And he put some provisions in for the local track and horsemen that in order to bring horse racing product into the state of Colorado, we have to start to deal with the industry. So that's that source market fee we talked about. Those rules have exist in draft form. They're yet to be approved. Potentially at their next meeting they will. But they have set that up straightforward under a sports bet. So there doesn't necessarily need to be legislation changed if you're going on a sports book. It may just be getting it approved to be another sport in a sports book. Eddie, now let's talk about Louisiana. You all are trying something new. You're like a unicorn. I mean, I hold up Louisiana, and I have to just say this because, you know, horse racing has felt entitled to all kinds of alternative gaming. And that would be slot machines, you know, we deserve it, it's an expensive sport, and we all know why, we all are in the industry. But when sports wagering came along, the leagues all tried to get an integrity fee. Like, we're putting on a show, we need a percentage, and it was struck down everywhere. Horse racing internationally has always been treated a little differently. But I commend the state of Louisiana for thinking about their horse racing roots when they put sports betting legislation in, and to thunder over here, but horse racing gets 2.5% of the taxes on all sports betting in the state of Louisiana, and that goes to Louisiana breds. I mean, that no other state has that kind of power there. Now we're moving on to fixed odds on horse racing. Tell us about it, Eddie.
In Louisiana, when the legislation was passed, under the definition of a sports wager, horse race wagering is specifically included in a sports book bet. So it is a form of sports wagering by definition in the statute. So that's number one. They also picked up some language that was designed to protect the horsemen of Louisiana, which is what we speak about religiously in the capital with our high, it's not profitable, it's too high for a sports book to want to be engaged in Louisiana at this time in offering horse race wagering as a sports book. So we are going in and attempting and working with our legislators to reduce that to a level that we think protects our horses' purses, that we gain a revenue stream from this form of gaming, but also bring them in as, we've always used the racetracks, and now we'll use the sports book as our partner in making this work in Louisiana for everyone. The racetracks get to share in revenue, the sports book get to, I like to use the word, they get to earn equitable revenue, and the purses receive an equitable share of the revenue. So that's where we're at the moment, and I can tell you, going back a second to the cannibalization, as Louisiana has introduced more and more forms of legal gaming, pari-mutuel handle has been eroded for the last 30 years. Just from 2010, the fiscal year for the state, 2010, to fiscal year 2020, the amount of handle processed in Louisiana, at Louisiana facilities and account wagering and so forth, from Louisiana residents betting on everything, dropped almost 50%, from just under 280 million to 141 million in 2020. So we have been experiencing that, and that's what we've always taken the time to explain to our legislators, that that's why when we ask you to please take care of the horsemen by letting us participate in this new form of gaming that you want to introduce to the state, please keep us whole, because we used to be the only form of legal gaming in Louisiana. So that's always been our front foremost discussion points, is take care of these horsemen who are backbone in Louisiana, and we are spread throughout the state. So urge you to work with your legislators, explain to them the economic impact of the industry in their state that they need to help protect.
And one thing I would be remiss not to say is, as sports book licenses are given out in states as they become legal, racetracks are receiving them. So the racetrack itself is benefiting by getting a sports book license. However, the differentiation is, the state of Louisiana goes directly to purses. I think Iowa has a little carve out as well that some money goes directly to horse racing. So I just want to make that differentiation here. I mean, we're grateful that racetracks are getting sports wagering, and it's another flow of income for them, but it doesn't necessarily mean that's going to trickle back into purses. Dave?
I would encourage everyone to have a conversation with Ed as he moves through the process, because in this slide, the potential model, that 0.5 to 1%, it's going to have to be done most likely legislatively in your state.
Or rulemaking. Well, Colorado's rulemaking. It's a rule.
Well, with rulemaking, that's correct. It depends on your state law, where it can be the rulemaking process or legislatively. But if you can capture even a half point, and maybe even a quarter point, if you've got enough residents in your state, there's next to no leakage on that, because what we're talking about here is people in your state betting on products from out of state. And if you've got a big customer base in that state, if they've signed up millions of customers in Louisiana, that potential for that quarter or half or full point going to the racing industry is huge, and can't be overstated. But it's not going to be through a contract with the bookmakers. That's not how you're going to do it. Unlike when you're selling your product, you're exporting your product for fixed odds. It's a whole different model than that half to 1%. And I think that half to 1% in most cases will dwarf what you're going to receive when you're selling your product out of state, unless you're a big exporter, maybe at Gulfstream Park, it won't dwarf. But for most tracks, that half to 1% is going to dwarf the 2% when you're selling your content, and that's going to have to be worked out on a state-by-state basis. The Colorado horsemen are in good shape to get a fee. Lord only knows what the New Jersey horsemen do. I represent the New Jersey horsemen, but anybody who can sort through that legislation and figure out who's getting what is doing something, because it doesn't specifically state that anywhere. So who knows? But those are the only two states that are currently have regulations. So everyone else in this room is going to have to work through that process and getting that percentage, whether it be a quarter, a half, or one, to your stakeholders, being the racetracks and the horsemen on a 50-50 split is going to be vital in this process.
And New York has draft rules they're looking at too, and that's a whole other game because the tax on sports betting in New York is 50%, and that brings on a whole other dynamic. So, we just don't know from state to state how it's going to look. It'll be slightly different, but I feel like, we're at the point of our panel with the big reveal. So how much is this worth to horse racing? What are we going to get? And I think, Richard, I'm going to ask you this because this is the question everyone asks, because we know how much we get from a host fee on a simulcast. You work around the world, you know what we sell horse racing for. What's your gut feeling in the United States? What's the product worth? What can tracks and horsemen expect to see the product be worth?
Well, okay, and I think clearly this conversation has suggested correctly that every state is going to be different. And my experience here is around selling horse racing content to various sports books all around the world. And sports books would generally be expecting to pay somewhere around about an equivalent of 3 to 4% of turnover. That would be and again, all around the world it sits in slightly different places, but when we look at what we sell horse racing content to sports books in various different parts of the world, 3 to 4% turnover, and therefore the models being proposed here is not unreasonable. And of course, those sports books can look at that in the same way that I can. So, if the guys over here from Entain or the guys over here from FanDuel, one of the things they're going to be doing when they're trying to work out how much they're prepared to pay is asking the guys in the UK, Ireland, and wherever they're based, how much do they pay for it over there? Now, it will be different here because there's a different market situation. But I think deals will be struck with that benchmark pricing as a thought process. But it's a new market, it's a new opportunity. There will be other ways of constructing the deal, as I pointed out earlier on. We've already had to be very flexible around the world to accommodate the various different ways in which tracks and sports books want to contract this stuff and the sorts of commercial deals they want, and we would expect all to do the same.
And I also wanted to point out for the companies like SIS, the distributor, they look at that and say, well, why are they 81%? And I think looking at how horse racing has to be packaged, both from the television side, the pricing is so different, from tote betting, where the pool, you just open it up and the pool makes itself. There's a lot more to it. So, that's a full number I see on here. It's 2% of the content owner, and then we're not quite sure what's going to be struck from state to state as we'll call it the source market fee. Dave?
I do think on that, whether it ends up being 2% or 2.5% of the content owner or 3%, wherever it ends up, I think it's important in the U.S., if we're selling the U.S. sports books, that it is a share of the handle. I don't think anyone wants to enter into a revenue share in this market at this time. There is so much that the bookmakers, certain bookmakers will come over and have the experience, and the odds makers, certain ones won't. Regardless, though, we don't want to be in the business of booking bets. I think it's a bad look for horsemen to be in the business of being partners on booking bets. This host fee model, which we're currently doing, we're just selling our content just as we currently sell our content. So I think for selling it to a U.S. sports book or a series of U.S. sports books, it's important to use the host fee model rather than a revenue share model for no other reason than perception. I don't think we want to be seen as being partners on with bookmakers in the upside or downside. It's not a good look for us.
I have a little add-on to that. I don't think it's so much the revenue shares are done around the world, but why you would want to do it in the United States is because of the promotions. There's spending so heavily on the promotions that you might be down to zero by the time you get to the bottom.
They are all losing huge amounts of money at the moment, so sharing in that is probably something you don't want to do. I think the flip side is, the opportunity on a turnover basis is when they get a hold of this, the turnover is going to grow and grow and grow. And therefore, again, I would say that's got to be the smart way to look at it.
I just wanted to underline, I view it almost as two separate businesses. Selling your horse race content outside of your state or to other sports books is completely different with a different set of factors you have to take into account than trying to make sure that your purse has received some money from sports bets processed in your state or horse race.
But, and again, that's a really good point, because with sports wagering, you look at the Wire Act, each state is geo-fenced. So you're not going to see sports bets on fixed odds horse racing if they're on a sports bet going from state to state. So I think, to kind of wrap up where we are on the panel, Richard, I'm going to come back to you again and say, how do you see this unfolding in the U.S.? How do you see the ramp up, the start of it, how long will it take?
So I think, we said, it's worth saying again, this is going to happen clearly on a state-by-state basis as the regulations come through. As I mentioned at the beginning, it's not so easy for a sportsbook to simply start to do this once the regulations change. There's quite a lot of work they need to do in terms of integrating all of the data and all the feeds necessary to be able to do it. There's also quite a lot of front-end work that they need to do on their websites to be able to present the odds in the right way and drive that consumer experience. And we are talking to sportsbooks now about the idea that they would prepare to do that early on, so that there isn't a great lag time between when a state chooses to regulate on that way versus when they are in a capable position to do it. Those conversations have started, but nevertheless, I'd say from a standing start, it's going to take them 6 to 9 months to be able to get ready to do that properly. And so that would be a sort of natural length of time, and that's why we're starting talking to them now. However, that might be different if some of the operators in the US are already operating with this content in other parts of the world, and the tech stack is the same. And we know of at least one who actually could start more or less straight away by simply turning off the geoblocker. So I think it's going to be quite interesting, because some of the sportsbooks out there, depending on how they've set themselves up technically in the US, would be in a position to go very quickly. Others, it would take them an amount of development time and integration time to be able to get ready and running. And again, from an SAS point of view, we are often dealing with these people either in the tech stack that is and could be used in the US, or dealing with them outside of the US and talking to their US divisions to work out how they're going to plan to deal with all of this. So we're trying to give everybody as much insight as possible and as much visibility and clarity of what it's going to take to get ready, so that these work streams are happening in parallel, and at a point where a state chooses to allow this to happen, that there isn't a great long lag time before the revenue benefit starts to flow through.
One thing I see happening too, you talked about the content you're trying to bring in, and we're trying to bring in from international, is there will be a number of races, maybe 30,000 races or more, coming from outside the U.S. to kind of get the content going. And I see then certain tracks adding in, certain U.S. tracks saying, okay, I'll give this a go, and whatever state goes first, and slowly add on. So I think we're going to see content gradually increase from the beginning. There'll be internationals, a good kind of litmus test, as we have a few domestic tracks. And you're probably going to see, whichever state happens first, that not all the sports books will have it immediately. It may be a ramp-up approach. You have 1 or 2 start out with it, and as they put it into their priority list, we'll add it on. So, one thing I think we need to consider is, I've been talking about this for 4 years. It's probably going to be another 5 till we're at a mature state of seeing what this can really do for us as a horse racing industry. Anything else?
No, I think we covered it all.
All right, questions?
People are still awake, that's great.
I'm not sure about that, Ed.
We've got a couple of questions. We've got Doug Reed.
And just
Microphone.
Doug Reed. Ed, questions for Ed, just for clarity. When you were talking about horse racing getting the carve out, are they getting the carve out from the Louisiana that are betting fixed odds on horse racing or fixed odds on all sports?
On all sports.
Okay, and you say it's too high and you're trying to get it lower so it's feasible?
No, we're currently getting a carve-out of the tax dollars are dedicated for Louisiana bet purses on all sports. What we're working on now is going to be a specific purse distribution on horse race wagering only.
Okay, thank you.
This is another question for Ed. I think Louisiana offers an interesting study, and you said since, I think it was 2010, the 50% decline. Have you noticed a direct correlation when the alternative forms of gaming have been implemented, that there's an accelerated decline, or has it been more of a decline generally over the last 12 years with the change in the horse racing product, whether it be smaller field sizes? I guess Louisiana might not be as sensitive to medication changes as some other states, but I didn't know if there was just a different product that has occurred over the last 12 years, or have we seen more tied into the alternative gaming choices?
I agree with what Dave said. There's a multitude of factors that have gone into the decline of the parimutuel handle, particularly in Louisiana, but I think this holds nationwide. Many of the things you just mentioned are factors, but I do believe in Louisiana, the most predominant factor has been the introduction of other forms of legal gaming. We used to be the only, we had the monopoly of legal gaming. Not that there wasn't other forms of gaming still going on, but it certainly, as it became legal, video poker, slots, lottery, as those forms of gaming became legal, more and more of our customers, instead of going to the racetrack on a Saturday where we used to have 20,000 people at the fairgrounds when I was a clerk back in the 80s, you might have 2,000 or 3,000 now, because many of them went to the Mississippi Gulf Coast to go to casinos for the weekend, go see the free concerts. They might be going to the local riverboat casinos because they offer a larger and a more, I guess, competitive wagering model than parimutuel. And I'm not trying to bash on parimutuel. Parimutuel has a lot of fun aspects to it, but it hasn't competed well with the other models that have been introduced.
A lot of choices. People have choices today and every day.
Comments?
Richard, two questions, if I could. One on the cannibalization point. Do you believe that the bookmakers, whoever end up taking racing, will engage the pari-mutuel pools, particularly the win pools, and be betting into those to lay off some of the liabilities that they have, so that maybe there is a little, it's not necessarily a bump, but some help that the pari-mutuels will get, because it gives the bookmakers a chance to recoup, or at least to hedge. That's one point. The second point is, based on the integrity infrastructure that you see in mature wagering markets that have fixed odds, certainly Europe, Australia, do you believe that American racing jurisdictions are going to have to significantly increase their attention to integrity-related matters? And I'm not talking, obviously, about HISA-related topics, medication, that sorts of thing, but really the way in which races are adjudicated, how stewards oversee the races, and really police the sport.
Okay, thank you. On the first one, within fixed odds, trading rooms do like to hedge, and they do like to move money around. That is perfectly possible, particularly because the pools are more liquid here, and therefore there is more of an opportunity for them to be able to use that as part of their trading and liability management strategy. So I think it is perfectly possible that those trading rooms would choose to do that. I can't say that they have to, so they can make choices, but I think because of the strength of those pools in this market, that's a very reasonable option for those trading rooms to take into consideration. So that's quite possible. I suppose my integrity answer would be that they're already betting on this product. So nothing needs to change. They're happy betting on it. They're keen to have more of it from around the world. So I'm no expert on the specific issues of integrity on a step-by-step basis or track-by-track basis, even though I'm interested in it here. But I certainly, there are plenty of people better qualified to talk about it than me. But I think it's a simple truth, which is people want US horse racing content in their sports books. both here in the US and outside of the US. And that's an existing demand now. And I think as the market starts to further develop, and our view would be, again, over time, we think fixed odds will be good for the industry here. And as that benefit flows through the industry, our expectation is it will strengthen it. And more money going through to the tracks, more money going through to the horsemen and the owners, inevitably improves the quality of everything that happens. And therefore, I think we see upside.
It's a little off topic, but not really. I mean, we sit in these meetings, and I think we've done it for years and years, and we tend to focus on a lot of the negative things because that's what we have to do. That's our job to fix the negative. But this is the greatest sport in the world. I was the greatest sport in the world 35 years ago when I got into it, and it's still the greatest sport in the world today. And I think that's what we need to focus on, and the fact that we can get the greatest sport in the world out in front of a new generation that hasn't seen it before and get exposed to it. We saw it in the pandemic. When horse racing came back first, that didn't stop. Last year our handle was up, way up over pre-pandemic levels, and it's because new people got exposed to the sport. We got to keep exposing this sport to people. It's, like I said, the greatest sport I've ever been around. And you get up this morning and look out the window, and there's 120 horses on the racetrack at Oakland Park. And you cannot beat it. And we can worry about everything and focus on that, or when we go out publicly, we can say, I'm going to live in the greatest sport that I've ever seen, and you can do it too. I got no background in this sport. Zero. Nobody in my family is in this sport. If you're a smart person, you got passion, you'll make it in this sport. Look at this panel. Michele Fischer, mom of the horse trainer. He's traveled the world. Ames just came back from Saudi Arabia. Traveled the world with the sport. Richard's worldwide. Eddie Churchill down to 30 years. It doesn't matter what your background is, female, male, minority. You can succeed in this sport if you're smart and passionate about it. And that's what we've got to get out to everybody.
And I want to echo what Dave said. Everyone in this room has experienced the excitement of racing. And we're going to go experience that tomorrow here at Oakland Park. And it's just, for me, many years working at the fairgrounds, it was like working at an event every day. I used to tell people it was a joy to go in. It was part of that entire exciting atmosphere. And with fixed odds wagering, what is also very appealing to me, this is going to begin a new revenue stream directly tied to the live race product. This is just something that will be communicating that excitement to a whole new customer base. And to me, that's the most important thing we have going for.
Well, thank you guys. Let's give this great panel a round of applause. I really appreciate all of them making me here today. I definitely want to thank the Virginia HBPA, the University of Louisville College of Business, and the Louisiana HBPA for helping sponsor this great panel. We really appreciate that. In the interest of time, we're